Welcome back. Now it's time for our weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Julie. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing continued strength in North American equity markets, starting with the U.S. markets first. We are looking to see about 6 weeks of straight gains for the NASDAQ. The broader markets in the United States continue to show some very nice strength, particularly in tech shares and energy stocks as well. We're watching the price of WTI up by about 2.3% on the day, now trading above that $70 mark. Remember, it has been under some significant pressure, the price of oil, that is, despite the fact that we've had OPEC plus cuts in terms of their production. And it's likely due to the fact that we're seeing tepid demand out of China and also increased production in the United States. So we've seen quite a bit of volatility within the energy sector, and certainly that on the back of the price of WTI. Focus today in the United States, of course, is the non-farm payroll report, jobs report, that is, coming in much better than expected at 199,000 versus 175,000. Importantly as well, the unemployment rate actually ticked lower to 3.7% from 3.9%. So we're continuing to see some nice strength in the U.S. market, U.S. jobs in particular. We also had some very strong results with respect to the Michigan consumer sentiment coming in much better than expected. So this is leading a lot of investors to believe that we will in fact see a soft landing. That is one of the key reasons as to why the markets have been moving higher in the States, the equity markets. And also, of course, the belief that the U.S. Federal Reserve has in fact hit their peak interest rate hikes. And investors are now looking for the potential that the U.S. Federal Reserve will, in fact, cut rates in 2024. So that's giving a little bit of a boost to the broader North American equity markets. Away from that, in terms of some stocks to watch in the United States, Lululemon, of course, it's a Canadian company. They did come in with better than expected results, specifically the same-store sales, a key indicator to watch for retail stocks, did come in better than expected. The guidance was a little bit light, however, but the street seems to be shrugging that off, just thinking that the company management is conservative about their guidance. That stock's up over 3%. We're also, though, keeping our eyes on Restoration Hardware. They did miss on earnings as well as revenue. That stock down by about 14% today. And they are citing some weakness within the consumer. So again, we are continuing to see the rollout and the impact that higher rates have had on the consumer over the past year, and you do see it in some of these home goods stores. What to watch for next week in the United States? CPI is going to be a key indicator in terms of what the Fed may or may not do in terms of raising rates, not raising rates, being on pause. And the FOMC meeting will be on December the 12th and 13th, so very important there as well. Retail sales and also industrial production will give us an indication in terms of whether or not we're seeing some softness and whether or not we'll actually have a soft landing or a hard landing. That is still a big debate on Wall Street and Bay Street. Shifting to Bay Street, the TSX is up on the day. It was somewhat range bound yesterday. We are seeing energy stocks lead the way higher today, and the Canadian dollar is higher versus the US dollar. I should also mention that Bitcoin is up by about 1.6% today and on track for 12% gains. So we're seeing a real buyback into the digital currency. Away from that, the BOC, the Bank of Canada, of course, held the rate steady at 5%. And the expectation amongst investors is that we will actually see rate cuts in 2024 from the Bank of Canada. I interviewed a very senior portfolio manager, which will air this Sunday, so tune into that. He actually believes that the BOC must cut rates because of the impact that it's having, the higher rates that is, on the consumer here in Canada, and really stunting growth, of course, to the negative side. So keep your eyes on the BOC, of course. In terms of some stocks to watch here in Canada, take a look at Headwater. The ticker there is HWX. They came in with their 2024 budget and an operation update. That stock is up by about 3 to 4% today. Obviously, investors liking what they're saying. And Canadian Western Bank also up by about 4% following their better than expected results. So some nice strength there as well. I would also just point out that the Bank of Canada Deputy Governor did talk about the fact that immigration has not fueled price inflation, but it has fueled shelter. So that's an important aspect to watch, as well as so many people are feeling the pain of higher housing costs. Away from that, we are seeing Alberta's premier clash with Ottawa as it relates to increasing those emission caps to the level below 2019. What does that mean? That means higher energy costs for everybody at home. I'll leave it there, Julie. Back to you.
And that was Catherine Murray, host of the Buck Stops Here. For more market coverage, you can tune in to the Buck Stops Here Sunday mornings at 9 a.m. Eastern, only on the Newsforum Network.